What is up, everybody? Welcome back. Well, let me get this echo fixed. Welcome back to another episode of Benzinga Live. It's Wednesday, hump day. You know what that means. It is Wednesday. Markets are up after some Apple news that we will talk about. That is your biggest headline of the day. I have Apple's stock pulled up here, still down 3.4%. We'll talk about a potential Apple trade that I like right now. We will also talk about, as the title suggests, is it time to get bullish? Most people think no. Most people are bearish. I'll tell you why. Kind of the contrarian take right now. It may be time to consider, this is not financial or investment advice, entertainment and informational purposes only, but why for me, myself, I am getting more and more bullish as the public, as retail gets more bearish. We'll talk about that. Quantum, what up? How y'all doing? Let me check, see. Yep, we're still live over on live trading. But as we wait for those to filter in, I'll give you guys a quick rundown of the show today at 12:15. I have an exciting interview with Noggin. You've heard a lot about different SaaS companies. Noggin's a different kind of SaaS company. It's actually a commerce as a software, or commerce as a service company as opposed to software. So Jan Nugent will be joining us from Noggin 12:15, and at 12:30 we will have Jason Krutsky from TrendSpider run through some charts with him. Always good to talk to Jason, someone from TrendSpider. They're doing good work there. We've got other headlines as well, of course. In Britain, central bank giving signs of quantitative easing, saying, hey. And we can look at, we talked about the pound to the dollar, saying, hey, look, eventually, right, this has got to correct. So we'll dig deeper into the news from Britain, exactly what that means for us here in the U.S., what that means for U.S. markets. Again, we'll go through all the biggest stock news of the day. Beach bum trading, where are you at? That's a good question. Hopefully he'll be filtering in soon. Let me know in the chat what stocks outside of Apple and whatnot you guys are watching today. Euro. What about the euro to the dollar? How's that doing? Still lower than a dollar. Euro is still lower than a dollar for the first time since going back to 2001. Wow. Let me get my Benzinga Pro pulled back up. But all right. So, and I know we covered this on Benzinga, so let's get our here's why we're potentially starting to get a little bit bullish. Why, if you are bullish, some things that you're looking at right now, thinking, all right, this could be good news. So the Central Bank of England, let's just do this. England Central Bank. The Central Bank of England announced, so there was the bond market was essentially collapsing. The Bank of England took emergency action Wednesday to stabilize the UK financial markets head off a crisis in the broader economy after the government spooked investors with a program of unfunded tax cuts, sending the pound tumbling. So we talked about earlier this week on Monday why the sterling was crashing over the weekend. This was in part of it because the UK government announced tax cuts to the wealthiest people without having a way to necessarily pay for those tax cuts, right? Because if the government's expecting a certain amount of income from taxes to pay for certain things, and then all of a sudden you take out 10 or 20% or whatever of that pool of money coming in, you got to have a way to pay for that. Whoa, did not mean to click on that ad. Sorry, Verizon. So the Bank of England said it would buy long-term government bonds over the next 2 weeks to combat a recent slide. So this is quantitative easing. Just as the central banks here in the United States, we've been getting ready to, and quantitative tightening, selling assets. The Bank of England is going out and buying assets and trying to stabilize the economy. And here's the thing, too. Just like here in the U.S., a lot of pensions, retirements are baked into investments in the UK. The UK really can't handle a complete collapse of its bond market without a large portion of its population being completely screwed. Which this is always the expectation, right? The Fed, the central bank here in the United States, and central banks across the world can get hawkish, can say we're going to be tough on inflation to a certain point until they need to come in and say, hey, now we're going to be the good guys and save the day and make sure everyone's okay. And that's always going to happen. They're never going to sit there and say, oh, we're looking at inflation, so pensions be gone. Who cares? Inflation's the only thing we're looking at right now. No. Of course, they're going to take action, emergency action if needed, but to combat this. And that's what we're starting to see. I'm not saying, okay, today's the day, September 28, 2022 is the day that marks as the day that central banks across the world are going to start pivoting from hawkish to dovish. I'm not really saying that. I'm saying we're already starting to see signs, not just from England, but across the world, that the central banks are already kind of being like, hey, yeah, we've been tough. Now let's start, this is the other one out of Australia. I don't know how much we really care about what the Australian bank is doing, but Australian consumer confidence jumps as RBA signals. So Australian consumer sentiment jumped to its highest level since May as inflation expectations tumbled, reinforcing the Reserve Bank's. I'm going to be blocked out of this article on Bloomberg, unfortunately, but Australian consumer sentiment jumped to its high level since May as inflation expectations tumbled, reinforcing the Reserve Bank's signal on slowing the pace of interest rate increases. So I'm starting to see, this came out late Tuesday or Monday night, the 26th. If we start seeing headlines like this across the board, that central banks are starting to slow the pace of interest rates, that's going to get investors a little bit more confidence in saying, hey, maybe we can start deploying some more money here. Shout out Daljit Singh, new YouTube member. Woo! Love that. Smash the like for Daljit, everybody. Is it time to grab puts, or could the last few days actually have been the bottom of the market? True rally or just bear market rally? Well, I mean, if you're saying have the past few days actually been the bottom of the market, we made new lows yesterday. Typically, new lows means you're going to make new lows. And I said yesterday, I with Options Mike said my kind of, I guess if you were gun to my head, asked me to make like a prediction of the S&P 500 over the next few months, I said, I expect it to keep going down a little bit in the short term, but I'm more bullish than your average Joe right now, saying, yeah, I mean, we might go down another 5-10% on the SPY, but at that point, I'm buying, I'm expending all my cash, all my dry powder going long, because I don't think we're going to see another, 20% drawdown in the SPY. We're close, by the way. If the SPY gets to, I believe, 3,300. It will mark a 50% drawdown of the overall market. Or maybe if we get down to, if we get down to 300 flat. No, because the peak would be 474. Does that mean? I don't know. I saw Ryan Dietrich talking about it. Maybe he was talking about a different index. Average bear market is 32% down correction. So right now we are at 23%. But my only problem with I guess, like, you see a lot of posts saying, we've never had a bottom of a bear market without the VIX going to this price. We've never had a bear market without, this and that happening. First of all, the sample size isn't that huge. If you look at the S&P 500, on a long chart, right? If we pull up a monthly basis, we go back to 1994. How many real big drawdowns like this are there? Here's one. Here's another COVID rally, or COVID crash. Here's another 01. Or sorry, that's 07, 08. Here's one in 01. So 1, 2, 3 if we're counting COVID, 4 in the past 20. Like, that's your sample size we're going off of. And how many other bear markets or recessions have been this environment where demand's actually pretty high, right? A lot of supply chain issues causing inflation to go higher. You have the central bank essentially artificially crushing demand by raising interest rates to a point where, you know, once we get inflation coming down, which we've seen signs of it not coming down in certain areas, but certainly, you know, house prices cooled off in I believe it was July. The headline was at the fastest pace. Those things trickled down. Everything we look at in terms of CPI, right? Rent was one of the biggest things driving CPI higher last report. Those things are lagging indicators. That's over like the last 12 trailing months of rent purchases or lease signs. And as property values have come down over the last 2 months, granted, it's not like there's been, you know, some huge crash in the housing market or anything like that, but there's been a decent correction. Those things will filter down to rent, and it'll take months and months and months to see those. And you're seeing things like that indicate that maybe, you know, we have seen peak inflation, leading indicators, i.e., you know, shipping prices and commodity prices, because those things filter down. It's you know, economic theory that as prices fall for businesses, then those prices will fall into to customers. And that's why, you know, Wall Street, the Fed really cares more about the PPI opposed to the CPI, because it's seen as more of a leading indicator. SPY to 240 would be a 50% correction. Yeah, I'm gonna need to pull up the Dietrich post, or I believe he was talking about it. That's a nice line at 166. Down here, 166 on the SPY. I mean, again, I made this point earlier too. With right now what I've been seeing a lot on Twitter, and I can pull up the exact post if I want to, but it's just, I don't think really you can safely compare this market environment to every other market drawdown. And with that being said, there are going to be similarities there, and like we talked about with Options Mike yesterday, chances are we will see the bottom at some sort of capitulation point where you see a big increase in volume. We haven't seen that yet, right? If we go all the way back to 2020, you can see right here kind of the bottom coincided with when we were getting way more volume, right? On this day, there were... Where's my volume? Why is my volume not showing up? Show me my volume. I don't know why that's not showing up, how many shares were traded. But yeah, you can see on days like these are the volume bars down here. As the S&P 500 went from 340 down to 280 in the span of a week, you had huge volume. And you can see that on the chart here, right? The bottom was marked by this huge spike in volume, and we haven't gotten that yet. But again, let's remember the COVID crash, how kind of, you know, we were going limit down. The market was opening and we were doing circuit halts down 7% on the S&P 500. That's crazy. We haven't seen anything like that. Is it possible that instead of such a drastic downturn that you get those kind of things breaking, and in 07 and 08 you had, you know, Bear Stearns and Lehman Brothers and those kind of marked the capitulation point and bottoms of the market and peak fear? Is it possible that this market environment in 2022, where it's mostly being driven by inflation and Fed expectations, is it possible that it's a different type of drawdown and it's a more slow, gradual one until you know, people start buying and it doesn't look exactly the same as COVID, or, you know, maybe there isn't some huge... Yeah, of course that's possible. I wouldn't be betting the house, essentially, that, you know, we're going to hit some huge capitulation point and something's going to break. If you guys recall a month ago, right, the biggest bear case was energy prices in Europe. That energy costs in France and Germany and UK were going berserk, and no one was going to be able to make it through the winter, and there was going to be oh no, Tony Rosas, I'm not bullish after today. I've been more bullish than I'd say 100% more bullish than most people right now. I gave my prediction yesterday. I think I wouldn't be surprised to see the S&P 500 come down another 10% from here around the 330 level. Does that mean I think it should? No. But I think that's how trade. I think that's what's going to happen. I think we're going to keep going down here. But overall, I'm bullish. I don't think I'm not buying into the doom and gloom that people are out there. Shelly's saying they're still fucked for winter. And again, I'm not saying that the energy situation isn't bad there. I just am not buying into the, type of doom and gloom that there's going to be, people are going to be dying in Europe this winter because of energy prices. I mean, look at this. Where all these people, all the big bears posting things about energy prices in Europe, haven't been posting these charts from the past. Look at this. Netherlands, natural gas forward 1 month, went from above 300 to 173. France, baseload power, from almost 800 down to 447. Germany, above 600 down to 327. And that's where I stand on most of these things right now, is because the bear case seems to be changing, and I don't really trust, if you have super high conviction, like if you are if you are completely bearish right now for specific reasons and you have conviction in those reasons, that's different than someone who's super bearish and then they're letting different reasons come in, and kind of you get that confirmation bias, saying, see, I'm short, and now energy is getting so expensive that they're not going to be able to make it through winter. But, at first it was gas prices and inflation, and then it was energy, and then, again, I think we're seeing signs already that central banks throughout the world are being forced or have the ability to, because inflation expectations are falling rapidly, that they're able to, if not fully pivot and get dovish, start slowing down rate hikes and things like that, which will give investors throughout the world a signal that, okay, we can start deploying some of our dry capital. Again, we've talked about this. There is currently more cash on the sideline than at any point since 07 and 08 over the past 14 years. I'm not talking about cash on the sideline. I'm talking about institutional money, where hedge funds, big firms have taken more cash throughout the past year as the market environment has worsened, and now they're able to start deploying that cash back, and seeing central banks start to be able to get more dovish. I'm not saying they're getting dovish, but on the spectrum of hawkish to dovish, when they start inching back toward dovish, could be a sign that where we'll see some of that cash come off the sideline. I mean, Richard, I get it. Like that kind of meme, like everything's burning, everything is fine. I kind of think it is, honestly. Like people, again, like, who cares if the bearish case is flipping? Yeah, Shelly saying never change demand destruction is a thing. And again, my I guess counterpoint to that on the more bullish side, and I'm playing devil's advocate. I'm playing contrarian here because the majority is bullish or bearish. I'm sorry, the majority is bearish. I'm trying to play contrarian on the bull side. Never change demand destruction is a thing. In typical, economic cycles, when you have real demand destruction, it's not usually essentially artificially manufactured by the Fed. The demand's only destructed demand only remains destructed as long as the Fed is hawkish. As soon as Powell says one thing, and by the way, I don't even know how much that is true, because we're still seeing consumer spending, demand for goods and services really hasn't started dropping. We've seen it pivot, right? And we've talked a lot about that, from electronics and goods that people were buying more of than typical throughout COVID. They're buying less of now. Go figure, right? People buying TVs, computers, and iPhones over the last 2 years, more than typical, more than because people are at home on electronics more. Now that we're not, they're buying less of it. Doesn't mean they're spending less money. They're buying less of those goods. FedEx is shipping less goods, but people aren't spending less money. Consumer sentiment came in higher than expected. We're seeing inflation. We're seeing inflation come down. No, I'm saying everything. It's like, all right, I get it, right? A lot of people are in this doom and gloom, right? There's all these, food prices are going up, food facilities are being burned down, and to me, it's just like, are you filtering out? Like, we saw the headline a couple weeks ago that chicken wings are now cheaper than they were before COVID. I know that's just one thing. Food overall has remained very expensive. But a lot of these things that we're seeing are showing that, hey, maybe if you're looking at leading indicators as opposed to lagging indicators, we can expect inflation to come down. And in fact, if you look at the break-even prices, that's the expectation. So this is from Colin Roche. This is the Freightos Baltic Index Global Container Freight Index. Here's where we started. Here's where the Fed panicked about inflation. He said it's increasing, looking like the Fed panicked right at peak inflation. So again, are there underlying problems in our economy? Yeah. Are they being fixed by the Fed raising rates? I don't think so. Bomi Hunter saying, I'm finding good prices on meats in grocery stores. Got to shop weekly specials, Sam's, Costco. Yeah, and again, the overall grocery bills are still way higher than they should be, and way higher than I'm comfortable with. But I'm starting to see, right? Like, I was walking through CVS the other day, and they have the price tags on the shelves, and they, at Walgreens, CVS, whatever, they, paste over like with the yellow tag when it's on sale. And quite literally, like, everything was on sale. There were so many buy one, get one frees. And look, we've heard this from Target, from retails, that we have a lot of inventory. Target came out and said, when Target gave that big bad earnings report where the stock dropped 25% in a day for freaking Target, part of that was saying that they had too much inventory, that they were going to have to slash prices. And so those are eventually going to be... See, why is Target up 4.5% today? Can we get a whim on Target up 4.5% today? I'm slacking Bill. You're telling me... I mean... This is either two things. This is either the market being super inefficient and Target's up 4.5% on the day, as we're, increasingly going to recession and shit's hitting the fan and not everything's true, or this is the market saying, hey, things actually aren't that bad out there. You're starting to see England, pivot. So again, look, I'm seeing people in the chat that, saying Apple's going down below 100. I don't think so. This is not investment or trading advice. If you really think Apple's going to come down another 30% from here, which would be from 147 down to 100, right? About a third. You can make a lot of money on that. You make a lot of money buying puts on Apple. selling calls. There's a hundred different ways you could make a lot of money on that. That's not what I would be doing when Apple's already down. Granted, a lot less than the overall market, and we're heading into earnings. So if you think, no one was buying Apple products and the earnings are going to stink and the stock's going to trade off 30%, sure. But Apple's already, again, not really compared to the overall market, but it's still down 15, 20% from its highs. That's not when I'd want to be getting in on the short trade, when it's already been beaten up. Let me see. I'm trying to find some news on Target. But my point was, what this headline from Barron says, Target, Walmart, and Best Buy stock could gain as earnings outlook gets worse. Dead cat bounce today. Here's the thing, right? People, I understand every kind of headwind we're facing, bear case that's out there, right? The U.S. dollar is too strong. It's bad for companies doing international business. I know that. I know earnings expectations are going to be lower. I know that. I know energy's, expensive in Europe right now. I know central banks around the world are tightening and hawkish and have been. And eventually, I also know they will pivot. I don't know if that's, when that's going to be. But here's the thing, is how much of that does the market already know, is already priced in? All of that is. None of that is a surprise. Nothing that anyone is really giving me as a reason to be super bearish now, I don't think is already baked in, including earnings being lower than expected, which is why markets typically bottom before earnings. Because when we're in a downturn, when we're in a recession, or when we're in a slow period of economic growth, everyone knows it. Everyone feels it. Businesses feel it. Families feel it. Homes feel it. So who goes into earnings thinking, everyone's going to blow it out? That's why this past earnings, a lot of people thought, going into it, we've seen valuations get crushed. Now we're going to start to see the earnings crushed. And what happened? You actually had a majority of companies beat expectations because a lot of those expectations were already lowered across the board. I'm not saying markets are going to bottom ahead of this next earnings cycle, which again comes in about a month, right? We're going to see Apple report toward the end of October, around October 26th. Amazon, Microsoft, all that week. So that's a big week that people have on their calendars when we're getting the next big earnings cycle. And I'm not saying that the markets are going to bottom before that one. It could be the earnings cycle after that. But just thinking about how it would make sense, you would think, right, a bad earnings cycle could mark the bottom, could mark peak fear. But that's the nature of the stock market, is that those things are playing out in the market months before they're happening. I mean, and here's the thing I'll also say. I think that I'm not buying about the bear case right now. I don't know why the people that are super bearish. I get it. If you're like Michael Burry, who has been kind of a true contrarian, and a lot of people play in the bear side, want to be a contrarian. But at this point, like I said, I think it's the short trade is crowded. We saw retail piling into puts last week. We see on the AAII sentiment survey that now a majority of retail investors are bearish. So if you're bearish, you're in the camp with the public. You're with, the majority. The contrarian take right now is to be bullish. And that's why it irks me. It bothers me to see posts like, let me find this one here. Let me find this on Twitter real quick. All right, so this is from Michael Gaid, CFA. I'm gonna try to get him on the show. This would be a good dude to get on the show. It looks like he's got a huge Twitter following, 690,000 followers. He's a CFA. So hey, he's got more experience than me in this. He's certainly got more qualifications. Below are the top 20 largest peak to bottom drawdowns of the S&P 500 going back to 1961. Never in history in an extreme drawdown for stocks have treasuries, the risk-off asset, gone down more than stocks. Wake the F up, he says. And this is what irks me. Is like, who's he talking to? Wake the F up. People are already bearish. He's saying things got to get a lot worse before they get better. I'm not. Again, I could be completely wrong. I'm going to lose money if I am. But he's, again, with a this is actually a decent sample size, I guess, going back to 1962. But how many of these environments are exactly like this one? And I don't think a lot. And I think that's why you're seeing the bond markets and the stock market behaving the way they are. It's not because they're behaving erratically. It's because the markets are actually probably behaving pretty rationally, not 100% rationally. They never do, or else there'd never be, any type of trades to ever be made if the market was 100% rational and making rational moves all the time. But overall, if you look at the stock market and you look at things like actual recessions and stuff, you see the stock market start to sell off, before you get those economic, data points showing a recession. You start to see it come back before you get economic data points showing that things are getting better. You see the stock market move and precede these things that end up happening in the actual economy. So again, he's saying wake the F up to the 17% of retail traders that are still bullish. It just doesn't make sense to me. If he's right, and that's what I'm saying, Tony, right now, I started adding to my long positions, right? To VU, to SPY, to my safer, long positions. Because guess what? If what I think is going to happen, right, the S&P 500 going down another 5-10%, and then we'll see more of the central banks around the world, including the Fed, start to giving us signs that they're getting closer to being able to pivot, that inflation's coming down. I'm holding these on for a long term. So I have more cash. Say I had $1,000 ready to invest yesterday. I put a quarter of it into VU, into the S&P 500. As we draw down, I'll add another quarter. And if I'm wrong, I'm going to be down on my money for a little bit, for a while. I don't know, for a year maybe. And then it'll come back and it'll be sitting in my long-term account. But, history will show us. And here's the other thing is and I really like Ryan Dietrich on Twitter. He is the criticism for, him is it's almost like a baseball analyst or announcer saying, okay, this pitcher is the first pitcher to ever pitch 7+ innings every single Tuesday night in away games while wearing a blue uniform. And you're like, okay, that stat doesn't really mean anything. Ryan Dietrich will oftentimes kind of, I'm not going to say cherry pick, but that's what it is, kind of cherry picking stats to make a certain point. Bears do the same thing. Bulls do the same thing. And you're going to have confirmation bias. You're going to see things that say, you see that make you say, oh, yeah, see, my position is right. I have the right conviction. Here's why. And here's what Michael Gaid's doing here. He's saying this data point is showing that 100% we're going to need to see stocks come down more, and we're going to need to see treasuries come up. That's fine. But I would say to that is similarly, anytime you look at sentiment of retail investors, of individual investors, the bottom is marked by peak bearish, just like the tops are. Just like, look, week ending in 11/10/2021, this was the 1-year bullish high. Is it a coincidence that this was the peak of a lot of retail-driven assets? Bitcoin, ARK, Tesla, a lot of your growth peaked right when the amount of people that were bullish peaked? No, that's not a coincidence. Just like I don't think And again, we might see this 1 year bearish high, which we got this number last Thursday. We'll get this past week, so the past 7 days, bullish versus bearish sentiment later tonight, tomorrow. I wouldn't be surprised to see this number come up. But my point is, I anticipate that the bottom of the market, looking back on it, will be marked or will coincide with the height of how many people are bearish. Peak fear. And that's what a lot of people are saying as kind of why they're not getting bullish yet, is saying we haven't reached that peak fear point. We haven't reached, that capitulation point where people are starting to force sale. And again, in 07 and 08, you had, Bear Stearns and Lehman Brothers collapsing in peak fear. Okay, I just got word that our 12:15 interview most likely will not happen. Peak fears when we see Apple dropping like today repeatedly. I'm not saying this isn't a bear market rally. Again, I still my prediction. I'm not changing my prediction of that I think the S&P 500 will come down more before it comes back up. But Qs are up 1.3% today. Yeah, no real buying conviction. And again, we talked about that money being on the sideline. I don't think that conviction's coming in until we get more confidence that central banks, not just most led by the Fed, really. I think the Fed, when the Fed gives some signs, again, not that it's like getting dovish or going to start cutting rates to 0% or going, I'm not saying the pendulum needs to swing and it needs to be all the way on the other side. But if we're talking about a pendulum from hawkish or from dovish to hawkish, we were super dovish for a very long time. That pendulum has swung back super hard, and now we're super hawkish, and we have been. I'm saying if that pendulum, if it's on 100 on the hawk scale, dips down to 80, and we're still hawkish, but now we're at an 8 instead of a 10, that can be a sign that people start coming in. And I think that's where we're at right now on the spectrum of central banks around the world. If we were at a 10 on hawk level for international central banks across the world, after today, I think we're now at a 9 or a 9.5. But just that little inch is showing me that eventually the economic downturn, saving people's pensions, saving people's retirements will become a more important worry, not just for the Fed, but banks across the world, than 6, 7, 8% inflation, as we're seeing inflation come down again, not just in the United States, but across the world. Josh Pitt saying, I've been screaming buy for 2 weeks. So, hey, I'm okay holding my prediction that I gave out yesterday, that I think the S&P 500 is going to continue to come down, not as much as I think some people think. And then I think we're going to bottom out pretty quickly here and start coming back up. I'm not really anticipating any type of V-shaped recovery or anything, but I would certainly not be getting short in this market. You don't want to short a dull market. We're already down, from these highs back in January, 480 to 368. Here's the time to be short. This past 9 months. Yeah, exactly. Everyone loves a sale at the grocery store, the department store, but they sure do get gun shy when stocks go on sale. And that's the thing, is that's what I was laughing about a couple weeks ago. We were talking about Nvidia, and I was saying, I would, and this was when we were kind of rallying up here. I was like, if Nvidia gets down to back down to 130, I'd love it here. Then we get back down here. I'm like, I don't know. This thing's coming back down for a reason. And we talked about with Mike yesterday why I'm at least personally on this individual name the least bullish I've been on Nvidia in the past 3+ years. I'm the least bullish. I'm not really bearish on it because it's come down a lot. But I just am not going to be adding to my Nvidia position down here. We talked about that its core consumers, its core customers, gamers, have been very upset with Nvidia about its latest graphics card, feeling it's too expensive for how not much of an improvement it is. And eventually, I still think Nvidia, I think AMD, they're both great companies. I think they'll still, be higher in 10 years than they are today. But it wouldn't surprise me to see Nvidia keep coming down in the short term. So again, I'm not, I still think the S&P 500 is going to come down a little bit. I don't know. I'm not going to call, let's call it 355. I'll call that as my bottom. So I'll be another few percent from here. Wouldn't be surprised to see us come all the way down to 330, which would be a 10% drawdown. But that whole way we're drawing down, I'm adding to my long-term long positions. And guess what? If we don't end up going down there and I'm long and I'm starting my cash off the sideline getting long here, and my prediction about the S&P 500 dropping down another 10% from here is wrong, I'll be completely happy with that. I'll be completely happy with that. Why? Because I will be invested. I'll be getting good returns while the S&P 500 is going up instead of just having all my cash sit on the sideline. Yeah, the graphics cards, I think physically were not perceived very well as well. Wait, dollar is you're saying the US dollar is dropping? How can we look? We can look at UUP or DX. Oh my God. Don't tell me I called the top in the dollar and I didn't even play it. Shelly, can you help me go long? Shelly, can you help me go long? Either short the dollar. I don't know. I guess if you're going short the dollar, you got to go long the euro or the pound or something. Shelly, can you help me go long the pound against the dollar? UDN, Mitch is saying. Mitch might hop on for a few minutes. We've got Jason Krutsky coming on from Trendspider. Oh. I like this. I might buy some UDN because this is what I was talking about. Any single parabolic move you see in financial markets, whether you're talking about Bitcoin, Tesla, Dogecoin, ARK, any parabolic move, there's going to be a correction. The US dollar has been on a parabolic move over the past, I don't know. I mean, look at this. This is the bearish fund, down 22 to 16. We're just keep ripping on the, I think the biggest takeaway from this week, especially if we get any other headline, right? We already saw that Australia is limiting it is slowing down its rate hikes. We saw that England is now doing quantitative easing. If we get a third headline from a different central bank that it's starting to, again, not get dovish, but just take its pendulum from 10 on the hawk scale, I think that's going to be the biggest takeaway of the week. OP saying, Aaron, you can't short the US dollar if you're a real patriot. Bruh, it's bad for our economy. It's bad for our, it's not bad to have a strong dollar. We are we're the world kind of reserve currency. But it's bad for a lot. You know, you heard Microsoft come out and say, yeah, it's bad for us to have the dollar be this strong. It's bad for a lot of U.S. companies. I'll buy Bitcoin when it drops below 10K. I'll buy Bitcoin as soon as I think the Fed's pivoting. I don't care where Bitcoin's at. That's where I think mostly I'm kind of critical of well, I don't know, because a lot of times then the charts end up coinciding, like right with this big Fed decision. And it's crazy how it happens. But it doesn't matter if Bitcoin's at 15, 18, or 10. As soon as JP, my boy Jerome Powell, says, oh, yeah, we don't got to do 75 basis points next month. We can do 50, or we can do 25, or we're going to be fully data dependent. Bitcoin's going to shoot up. Doesn't matter where it's at. Netflix, nice move. We've been talking about Netflix showing relative strength against the market for a while. And now that the market's having a good day, look at Netflix. Look at this thing. We've been talking about how since its bottoms in May 2022, a few months ago, 3 months ago, Netflix has been outperforming the market. Netflix since, let me do some quick math here. Netflix since, we'll call its bottoms May 10th, May 11th, is up more than 44% right now. And again, you had value investors coming in, buying value investors were coming in and buying Netflix at 180 for its cash flow, saying, hey, this at this price is a great move. I've been trading Netflix. Look, as long as this is showing relative strength, I think you can play it on the upside. I'm not saying get in today while it's up, 7%. But there's a lot of kind of bullish trades. I'm sure there's a ton of bears out there right now. You could probably sell some $210 puts that expire this Friday if they think the move's going to reverse. What up, J-Raz in the house? What else? All right, so Netflix is up 7% today. We looked earlier at NVIDIA having a nice day, up 2.5%. How's ARK doing? ARKK up 3.5%. Again, I think as everyone is more bearish, I'm getting more bullish. I'm okay deploying some capital here while 60% of people out here are bearish. Someone give me in the chat, please. Shelly, someone out there that thinks I'm crazy for buying right now. And here's the thing. Here's why I said I feel like I'm being gaslit. I'm having to defend buying buying the S&P 500. People are like, you're crazy for buying this environment. I'm buying SPY. I'm not buying something, I'm not buying Ethereum, yada, yada, or Dogecoin. I'm buying the S&P 500. So I'm okay with it coming down a little bit more. But I want to know, what is a bear case outside of some catastrophic, something collapsing in what's the bear case that isn't priced in right now? Or what essentially does someone have that they know? Because let's think back to Michael Burry in 07, 08. He identified this mortgage-backed security credit default swap problem that really wasn't being priced in. And that's why the trade worked. I'm saying right now, I don't think the short trade works anymore because all of this is priced in. There's nothing out there that is concerning me that isn't already known by the markets, whether you're talking about the energy situation in the U.S., whether you're talking about the Fed, being hawkish, whether you're talking about inflation expectations. All of this is known by the market, by investors. Nibbling okay. Exactly. And I'm not saying, oh my God, in this market environment where we are, still hawkish and the market's still going down, I'm going, balls to the wall, buying on leverage, taking out margin loans and doing all this. No. But like I said, if I had $1,000 sitting in cash, ready to invest, then yesterday I put $250, a quarter of it, into VU. Again, the safest. I don't know. The VTI is probably even a little bit safer than the. Ooh, wow, VTI up. I might actually like VTI more right now than VU because with VTI, the total stock market ETF, you get exposure to some of these areas that have been even more beaten up than the S&P 500. Let's remember the S&P 500 is still only down. I say only, but it's only down about 23% from its highs. You have things like emerging markets, things in like biotech, whatever, that have been beaten up way more than that. That if there's a true reversion to the mean, you can expect those more beaten up names to come back a little bit more, a little bit faster, a little bit, better returns than the S&P. So I might like the VTI right now more than the S&P. You can see today the VTI up about 1.75%, while the VU is up about 1.15%. Small caps that have been absolutely crushed, right? You look at the Russell, IWM. IWM having a great day today. But if you look at how much the IWM is down from its highs, you're looking at give me a second here, 30% drawdown compared to the S&P's 22. The symbol on the NASDAQ fund, the symbol of that Vanguard fund is VTI. Let me go ahead and put it up on the screen. That is your total stock market ETF. So again, pretty much exposure to everything. We can look more into it. The Vanguard ETF that essentially tracks the S&P 500 is VU. And people typically, so here's what I'll say about VU versus SPY, because they're essentially the same thing. Vanguard is known for having very low expense ETFs. So people don't pay, a very high expense ratio. It's cheaper essentially to own these assets than SPY. What I'll say VU versus SPY is if you're going to buy and hold, I'd recommend VU. And this isn't investment advice. This is for educational, informational purposes only. If you're going to buy and hold, VU. If you're trading options, SPY. SPY has more volume and it's traded more, so it's better for trading options. Wait, why is the VU only up 1.08%, but the SPY's up? Usually it's like dead tracks. I don't know. We'll look more into that. But again, ticker of the Vanguard is VU. Vanguard, S&P, VU. VTI is your total stock market. D Nice saying thoughts on long QQQQQ. Again, I'm more bullish than I might be one of the most bullish people you can find right now. Not really, but I'm saying like I think the bear trade, I think the short trade's overcrowded. I wouldn't be surprised, I'll say this, D Nice, to see the Qs come. Like I'm not gonna say okay, yesterday was for sure the bottoms are in. I'm not saying that. Did I buy calls? Yeah, I do have some calls. Today's a good day. But it depends on what your time frame is. D Nice, if you're trying to do a swing trade like 2 weeks out, I don't really have high conviction that the Qs are going to be higher in 2 weeks than it is from today. But if you're talking about a long-term investment, I think adding to the Qs right here is almost a no-brainer. If you're talking about a long-term investment, you don't get buying opportunities like that for long-term investments too often, right? If we pull up a monthly chart here, and like Jay Rice has said in the chat earlier, people love a good sale at the grocery store. People love a good sale at the mall. People really love a good sale at the car dealership. When stocks go on sale, they don't want them. They don't like it. I mean, you got to go back to find a buying opportunity like this on the Qs a while. Now, granted, look at how much we grew and kind of how fast we grew here during the COVID markets. It's I think very reasonable to see this correction, but long term, I'm not buying into the doom and gloom right now that's out there that this and that's going to happen, and your Michael Burries are saying wake up and the whole world's going to crash, and Europe's not going to be able to make it through the winter, and the Fed's going to hike to 8%, and we're going to see all these things. I'm just not buying it. I'd rather just keep adding to my longs and be chilling. I'll collect my dividends on my stocks as we, and if we go down another 5-10%, I'll add more. Because here's the way I see it, honestly. If I'm buying long, if I'm buying my VOOs, my VTIs, and and I'm wrong, and there is some catastrophic, crash, and we're gonna see, we're all gonna be screwed, right? People's pensions are gonna, right? And no 708, no one was having a good time, besides Michael Burry. And just like the UK stepped in today to intervene in its bond markets, you're gonna see central banks across the world have to do that if things really start hitting the fan. And right now, the Fed has been open with, been honest about it, that their chief concern is inflation. But if the market keeps going down and then suddenly people's pensions are at risk and you have Social Security and all this, then suddenly inflation doesn't become the chief risk. Keeping people from rioting does. Keeping people from being absolutely screwed becomes the main focus. Yeah, please like and share. We appreciate it. We do have Mr. Jason Krutsky hanging out in the background, coming on from Trend Spider, so we'll go ahead and bring him on in a few minutes. I'm curious to see. I assume, I think looking at charts, most technical traders right now are I would say are more bearish than I am. So I'm excited to get Jason on. We'll probably have some kind of different viewpoints here. Bomi Hunter saying I would slow down on dollar cost averaging until we can shed some of the inflated fears. Yeah, and again, that's why I think the biggest thing here, no matter what, right? We have earnings coming up, people talking about that. I think the biggest thing still here at the end of the day, what everyone's watching is inflation, and coinciding with that, how the Fed is going to respond, interest rates. I do really think, I don't know if you guys saw that interview on CNBC with the Wharton professor that people were talking about that went kind of viral. If not after the Jason Krutsky interview, we can watch that interview and talk about it. I really do think when you're looking at leading indicators, whether you're looking at break-even prices, whether you're looking at energy price expectations in Europe, if you look at future indicators, it looks like inflation, the expectations basically across the board, not just in the US, that they are coming down and expected to come down. And we talked about this. The CPI that came out last month that came in hotter than expected, one of the biggest things that was in there that drove that higher was rent, which is one of the biggest lagging indicators. The rent calculation in CPI is taken from the past 12 months. So as property values, houses have started to come down. What's up, Raz?
What's up? You said you were excited to get me on here. Why?
I said we have Jason, a different Jason, hanging out in the background.
Oh, it wasn't me?
No, but I'm excited to have you on as well.
I thought you meant me. I'm sorry.
So where are you? So basically my whole point on the show today has been I'm more bullish than most people are. The average person is super bearish right now. Where do you stand?
I thought you wanted me on because of my stock up 5% today. Top Golf Callaway. We changed symbols.
They changed symbols.
MODG. MODG.
I don't really like the new symbol Maj. It's not an attractive.
I don't like it either. I don't like it. I dislike it, to be in fact, if I had to say anything. It's, I don't like that you're showing Google. I think you should be showing Benzinga right now, but that's okay.
I am now.
So
and then you have competitor Ashunet has golf, which is
me about Voyager. I don't know. People probably know I'm the chair of the credit committee for Voyager, the UCC. And this weekend it was announced that FTX is the winning bidder of the auction. However, things can happen in between the 3 weeks that's scheduled before it goes to final. Yeah, Jason with the goggle cleanup. What is he talking about? Okay. But yeah, Maj is up. My TF, I have a lot of.
I think he meant Google, talking about high Google instead of in Benzinga Pro.
Oh, got it. TFSL, HubSpot I've been buying on weakness. Started buying at 298, went down to like 280. I just think HubSpot's eventually a takeout candidate by someone. Crocs, I mean, I'm up 25% this year on Crocs, which is just crazy to me. It's like one of the stocks that I'm up on, which is just crazy. It's like, I don't know. DTE with boring stock. Another stock I've been buying, Aaron, CHPT,
Charge
ChargePoint.
point.
Every
Yep.
office, every building is going to have more more chargers, EV chargers. So I've been buying ChargePoint for, I don't know, a decent amount of time, because to me, that's a long-term trade. I hope to see CHPT at $50 2 years from now. My issue with the stock market, I'm usually correct on my directional trades. I just don't hold them long enough. Like LTHM was lithium, and I was in it before it. Basically, anyone that even talked about lithium, I held it for like a year and a half. Do you have lithium up there? I want to see what's that, because I'm not in it anymore. LTHM.
It's at 31.55.
Oh my god, I had it. Are you fucking kidding me? I had it. I had it $7, $6, 5, then 12, and then I sell at like 14. But and I never should have sold. Then Elon Musk said lithium is so plentiful, it's so easy to get. So I'm like, okay, that's going to drive it down. He said that on 2 years at the battery day a year and a half ago. So I sold I had a huge position in LTHM. If I just would not look and listen to Elon, that thing would have been, oh God. But that's why I'm buying ChargePoint, CHPT. Every office is going to need them.
CHPT, yeah. And a lot of these clean energy names have actually been some of the strongest in the market. If you look at like a First Solar FSLR, basically at all-time highs. It's at $134 right now. First Solar, Enphase Energy, a lot of these names that will be, and ChargePoint probably will too, benefit from that, Inflation Reduction Act from the government that's going to spend billions of dollars into the EV charging space.
Yeah, 100%. Now, we only have 40 likes here. If we can get another 30 likes right now, I'll answer Chelly and Brian's question. But if we don't, then I can't. I'm sorry. So I can't answer these questions. Being the chair of the committee, I'm not I can't give any much info. But what I would say, Aaron, is in a bankruptcy, there's a debtor and a creditor. Do you know who the debtor is, Aaron?
No, I don't.
I'll tell you. I didn't think I asked because the debtor is the company going bankrupt. That's Voyager. The creditor are people like me and other people that had money with Voyager. So unsecured creditors. What I actually call them are depositors, because I treated Voyager like JP Morgan. Like I used it as I wasn't buying risky assets. I thought I was buying safe things. But anyway, so when the FTX was chosen as the top bidder, it's not one side just choosing. It's not one side just choosing it. The debtor actually kind of makes final decision. Then you could appeal it, etc. But my moral of the story is, we look at the internet for a lot of things, but what I'll tell you is, since I've been on, I'm more on the inside, I guess, there's so much false news or fake stuff as it relates to the acquisition. I just saw like Brian and blockchain comments were just like, no, I mean, it's just, it's not like how it works. And a lot of stuff's not how it works, and at the end of the day, I'm a spoke in a wheel. I'm not like the be and end all. The UCC on the credit committee is not the be and end all. We are a spoke. We are part of the process. But that's it. And there's government, there's judges. We're just a spoke, and people can speak up. They can write letters to the judge. They can file motions. People can speak up. The UCC is not the be and end all. Never was.
And I've seen people, I think, Jason, on both sides kind of publicly, whether they're tweeting at you or what, some people giving you credit for, thanks. Some people saying, why are you doing this? Why are you doing? I think the people going after you don't realize you're only in the position you're in on the board because, like them, you had money invested in this.
Yeah, I mean, and at the end of the day, I'm a broken record about what I've been saying. I've been, come on, 55 likes. I thought we can get to 75. My broken record, Aaron, I've said since I joined the board, and I only joined the board because to me, this is a big mental health thing. I think there's people that have lost life savings. You never know what is going on. Suicides. It's not funny. Like that. But I had phone calls with people that one guy had his money in for his wedding. He didn't tell his fiance, but he was getting interest on USDC at 8 or 9%. Well, that is Jason's Voyager investment is public, not news. Is public, not news. I don't know what that means. Okay. So, and those sad stories are why I wanted to be on the committee. The rest of the creditors are confidential. I don't know what he's talking about, but let's go back to what I was trying to say before this guy confused me. So the rest of the creditors. Oh yeah. So I wanted the reason I wanted to see if I could help is my whole broken record was get the most amount of money for creditors or depositors in the shortest amount of time. The most amount of creditor depositors in the shortest amount of time. That doesn't mean, Aaron, if there was a solution to go like a long-term solution, give people their most money. It's not that I would avoid that. I wouldn't, but I just want solutions because every month this goes on. There's lawyers, Aaron. There's financial advisors. There's bankers. There's this, that. The amount of costs that accumulate monthly in a bankruptcy, you wouldn't believe it, man. You would fall off your chair if I told you some of these fees. And it's one of the reasons why I didn't want to.
How do lawyers get away with charging so much?
It's just it's just how the process is set up right now. When this is all over and done, I don't like one of the things, if you buy a house, Aaron, okay, when you get a mortgage, there's a good faith estimate where it discloses the fees. If you go look at bankruptcy, if you go look at the filings, which you can on the Strato site, it's very hard to read the fees. There's no table right up front. It's not easy. And that's just how the process has been set up. And now the lawyers are doing hard work. Don't get me wrong. It's not saying anything negative. The lawyers and the financial funds are the ones who do the hard work on it. We give votes, but it's how the process has been,
Yeah, it's kind of like how at hospitals, like you'll get care and then you'll get slapped with the bill at the end. Like people get a lawyer and then they're slapped with the bill. They don't. It's not upfront like you're saying, like when you buy a house or something. But
it's not necessarily easy to see. And then I've had my own lawyer, and and I'm a volunteer on this committee. Like, so when people rip on me, I'm a volunteer. And at the end of the day, I have a decent amount of money at Voyager, a decent amount. If some of you guys heard, you would maybe fall off your chairs. And I treated Voyager not as a risky investment. I treated it as my own.
So wait, before I do have Jason Krutsky from TrendSpider hanging out back. You mentioned kind of how
Jason's
how
awesome.
this. Yeah, Jason.
That's a much better Jason than me.
Yeah. You guys are both Jasons. I mean, yeah. Who's to say one's better than the other? But
our names both go with the months: July, August, September, October, November.
I was gonna say, you mentioned it's a mental health thing for you too, right? People don't want to see money they have saved that they thought was safe. You also thought you had money that was safe in here, and like you're saying, it's a lot. What have you been doing? How are you kind of mentally like?
It was when I realized that I was going to bankruptcy. It was a Saturday morning. We were at a baseball tournament for my son. I woke up at 2:30, 3 in the morning. I couldn't sleep. I had as much anxiety as you could possibly imagine. I was like trying to find a pill of like a Xanax or something, because my heart was beating like crazy, because you have to understand, like, I really thought like Voyager was like a JP Morgan. I didn't understand the unsecured loans, never understood that. And Aaron, I own like inside Voyager, I own stuff, but I also own the stock. And I owned it because I invested a long time ago. But the stock was less of my concern. It was the money. Because imagine, Aaron, I don't know what you have, but imagine if you had all your money or a lot of your money in a safe. Okay, let's do it this way. I got the better analogy. Ready? Let's say you use a brokerage. You use the Benzinga brokerage, or you use E-Trade, or whatever you use, okay? Let's say you use E-Trade. You wake up tomorrow, and let's say you own Tesla, Apple, Facebook, and Nike. Let's say you have $50,000 in those stocks. Now, let's say said company went bankrupt. So said brokerage goes bankrupt. You wouldn't think that you're going to lose the money you have in Tesla, Apple, Nike, whatever, right? You wouldn't think that. Even if the brokerage goes bankrupt, you would say, okay, they're going to transfer that stock to you some way, somehow, right?
Yeah.
Yeah. Okay.
I would think. Yeah, and I think that is how that works. That there's some sort of insurance where if a brokerage, or at least E-Trade is probably insured, where if they go bankrupt, those shares would still be some. Maybe I don't know, but either way, I get the point that I would lose all that money there.
No, the point is, if you had those stocks and you're with a brokerage, the brokerage goes bankrupt, you wouldn't lose the money you own hold of the stocks, Aaron, because
Oh,
there's a thing called SIPC insurance. So if people listening to this show right now thought if they had money at a brokerage and the brokerage goes bankrupt and they would lose all that money, they would freak out, right? Because that's the whole basis of like the system, right? Companies can go. There've been brokerages that have gone bankrupt. There have been brokerages that gone bankrupt. There's one that you got pre-IPO shares, and then they transfer the shares over. That's how I have it. They transfer the shares over. It's not set up like that for crypto. So
I
people
see
that
what your point is. Yeah.
like, I'll give you a better example. I'll give you a better example. There was a guy that I know that had a nice seven digits with Coinbase. Okay. So he had 7 digits in Bitcoin with Coinbase, and he transferred it to Voyager like 8 months ago because he thought Voyager was safer. They had another better interest program. Well, that guy, let's just say that guy had $5 million when he lit Coinbase and he moved it to Voyager. Okay, he gets interest, thought it was safer. All of a sudden, Voyager goes bankrupt. That $5 million could be 3 million. Do you get what I'm saying?
Yep. So and my point in like asking you, I guess for from your mental standpoint, because I know personally, I probably have a little bit of I don't really have a gambling problem, but whether it's like options or at the casino, and sometimes if I go to the casino or something and I lose a couple hundred, $500 playing blackjack, even if it's not that big of a deal, like the next day I'll be super anxious about it and just be thinking about it. So like for you, it seems like you've been honestly pretty like chill considering everything's going on. How have you been, trying to handle it, seeing just handling the whole situation?
I personally just like faced it, and I don't know what's boring, but I personally just faced it, and some money's come back, and you know, there are hopefully positive outcomes that come from it, and just faced it, and I didn't put all my eggs in one basket, like definitely not. So I just personally faced it, and some money, like I said, has come back and will come back, and that's it. And what I say to people is like, in the short term, like, the thing to think about, this too shall pass. This too shall pass. But what I think about all the time is the people that maybe weren't diversified and have like 80% of their assets in there or 90%. And and those people, which I hope are few and far between, but I think about those people all the time because mental health, suicide, all this stuff are long-term solutions to short-term problems. The Voyager thing is, it'll be resolved in some way or another. And then there is a lot of misinformation. Like I saw someone say on here that they said the coins are insured. The coins, like I've never heard that before.
But
Um,
like you said, like some good might come out of this. This might be one of the things, or some, why we get better regulations, better insurance in the crypto industry, things like that. Like there be good things that come from this.
yeah, there should be better regulation with the crypto industry. There should be better information how bankruptcy works. There should be better transparency. I wish that I could like talk more publicly on the stuff. Like after I can, but I mean, I guess I can. I don't know. I wish I could.
Well, we're
There,
off the record now. You can say whatever. No,
there,
this isn't going.
there are some times during this process where um, you know,
By the way,
my
what
my
we should
my anger was expressed during this process more than once.
and yeah, I've heard some of that firsthand, but not directed at me, but he, going to bat for other people. Jason, what we should do, our buddy Mark Cuban has also been a proponent of getting some more regulations, protections for retail investors in the crypto industry. Mark Cuban, kind of similar situation, had a lot of money in some project that basically just went kaput, and lost all his money, and now started kind of battling. Mark Cuban's an outspoken guy. Said, "Hey, we should actually get some more regulation here. Maybe we should reach out to him and see if we can't draft something together to some lawmaker somewhere or something.
Yeah, there needs to be. But then, like, Andy Otis wrote, I mean, FTX Prez just quit because he said they were FTI insured. LOL. Like, taking one fact to make it why this person quit or whatever. It's like, I don't know. There's a lot of this stuff is not easy. And like, listen, back to the stock market. I mentioned I was buying HubSpot and a few others. I wanted to buy more Amazon when it went below like 100. It was at 118. I thought it would maybe go down a little bit more.
It's at 117 right now, so still under 118.
I was hoping to go down a little bit more so I can buy some more. I really wanted to go below 100, and I was going to buy.
Let's see here, Jason. I'm going to keep you on if you want to hang out, but I'm going to bring Jason Krutsky on as well.
Mortgage stocks, by the way, the rates are up. You think they're going to have a bad quarter, which I'm sure they are. But so when do you get into them? Yeah, bring on the better Jason. That's it. And
all right, we're gonna give. Or wait, are you gonna hang out, or do you want to give final words?
I'll probably head off, give him the attention he deserves. But I just wanted to say hi, and I got confused when you said Jason. And we got to 65 likes. I mean, 61 likes. All right. So there you go.
Beautiful. Still got to get to 70. At Jason Raznick on Twitter. Jason, of course, is the founder.
Oh, I wrote, please follow me, smiley face. Yeah, that's funny. Okay.
I'm trying to put it up bigger so people can go to it. But Jason, thanks for coming on. We'll get more updates, I'm sure, from the situation as you're able to talk more publicly about these things. But
yeah,
always great.
The Voyager UCC has a Twitter and whatever. That's it. All right. Give your money to Zunaid. He'll make you millions for you. Okay, Jesse. Thanks, Brian. Appreciate it. You guys are great.
Peace and love.
Peace and love.
All right, guys, that was Jason Raznick at Jason Raznick on Twitter. Go ahead and give him a follow. Let's keep things ticking. Without further ado, we're going to give Mr. Krutsky our very special guest intro and bring him on the show. All right, Mr. Krutsky, maybe the better Jason of the show today. How are you doing today?
No chance I'm the better Jason, but I am doing well. How are you, Aaron?
Good, man. So I don't know if you have charts or anything you want to share, but if you're new to us, Jason Krutsky is joining us from TrendSpider. TrendSpider is an awesome charting platform. I'm sure Jason can speak to it a little more than I can. But I know you've been hanging out for a minute. My thing, where I guess we'll start with this. What are we looking at here?
We're looking at NQ. We're looking at the NQ futures.
Okay, NASDAQ minis. I like this. So I was kind of, before you came on, talking about how I'm probably more bullish than the average Joe. I see you've got kind of a support line. Is that you trying to say that we've got a double bottom happening?
Well, I'm just trying to say that we don't have a lower low, right? Like if we were going to go lower, we'd have to make a new low, and we haven't done that yet. Now, we have done that on ES. ES made a new low yesterday. Right?
Yeah, technically, we kind of dipped below that June low, but we didn't close there, and I think a lot of people saw that as their big bear sign that we took out the lows, we're going to make new lows, and it hasn't really, I mean, it's only been a day, but that hasn't really materialized.
Yeah, this looks to me like a liquidity hunt, right? You just had a bunch of people who had stops right below this low, and they took them out, and they turned it right back around on them. Not a huge surprise to see that. It wouldn't have been a huge surprise to see a big down red bar, though, either. I think the secret to trading is keeping your mind open to any circumstances, right? Like, the best traders are the ones that can kind of pivot on a dime. And I think we have to at least be mindful. We have to be mindful that new lows were made on ES. They weren't made on RTY. They were made on Dow Jones Industrial. So we've got 2 out of the 4 major indices that did make new lows, and we have 2 that didn't. I think ultimately we're going to make new lows across the board. But do we get a face ripping, rally here? It's certainly possible. If you were logged into crypto Twitter today at all, or just, FinTwit in general, people are ready for a rally. Like, everybody's expecting a rally now. So I don't know.
Yeah.
I don't know how that fares for a rally. Like, usually they come when nobody's really kind of thinking that it's going to come.
I don't know how much, like, I don't know. We've been talking a lot about how the, AAII, the American Individual Investor Sentiment Survey, was the 1 year bearish high last week. And so I know a lot of people expecting some sort of a bear market rally, but I think overall, most retail is still, if they're not actually short position wise, they're more bearish than bullish. Yep. But I'm with you where and I've said this, and I guess it's kind of contradictory, where I think we're going to make new lows. But in my opinion, I think that's kind of, I think we'd be making new lows for not great reason. I'm still more bullish than the average. So as we make new lows, I'll probably just kind of be slowly adding to my longs. But yeah, I think right now, if you're watching the charts like you're doing, you got to be attentive to these levels and say, okay, if we clearly take out these lows, that's certainly bearish. But if we continue to kind of hang out above them or consolidate or maybe even inch higher, you got to be aware of that as well.
Right. That's what I'm thinking. I mean, until they actually properly take it out, there's plenty of levels above that could be tested, whether or not they'll be tested now or 6 months from now or a year or 2 or 3 years from now. We don't really know, but there's a lot left to do on the upside. So, just got to kind of take it day by day and look for setups that make sense to you and trade them accordingly, know what's going on in the the overall trend is clearly bearish, right? Like we've been in a downtrend for months and months and months. Whether go ahead.
I was going to say we kind of for a couple months from June 15th to August 15th, we're moving high. Some people, I got kind of, I'll admit, and I said this yesterday on the show, hand up, I did think during that rally that was a trend reversal. It wasn't, it didn't really feel like just a bounce in a bigger bear market. It felt like, okay. But again, at that time, the macro situation was a little bit different. We did think we had seen peak inflation. We hadn't gotten that higher than expected CPI report. So it looked like inflation was falling and we were still adding jobs, and maybe it looked like everything was going to be okay. Right. The macro situation has worsened since then, and we came back down and accordingly. And I think we're at probably a pretty fair spot right now.
Yeah, we were watching all of that stuff with the jobs report, with retail numbers, Jerome Powell's talk, what was that, last week, 2 weeks ago? I can't even remember at this point. But it almost seemed like this most recent Fed meeting, or where they announced the 75 bips hike, it seemed like the market finally heard what he was saying and said, oh, he's actually serious about
he's for real. He's for real.
They're going to actually do everything they have to do to bring inflation down, even though he's been saying that for the past couple times he's spoken when they've raised rates. He said, we're going to do this, and there's nothing you can stop, because all of the data suggests that the economy can take it. People aren't losing their jobs.
People are still spending money.
People are still spending money.
Even new home sales were higher than expected, with mortgage rates higher at the highest point they've been in 20 years, since 2001. New home sales were higher than expected. What's going on? I don't know. It's like the U.S. economy is like the little engine that could. It just can't stop, won't stop.
Yeah, or there's something under the hood that we don't understand, that nobody's really talking about. Like maybe it is just as simple as what Powell's saying, where the economy is strong enough to handle this, so we're going to keep doing this, period.
Well, I think one thing that I feel like is kind of being underreported or under talked about is because it didn't make sense to a lot of economists or people. You could be adding all these jobs but still see negative GDP. There's a lot of data showing we've had a drop in productivity overall, which is measured just by essentially added GDP per employee, whatever. And that number has actually come down, showing that whether it's from, COVID, work from home, these things. And it's that it can kind of make sense, right? You go from a global pandemic, everyone working at home. There might be some missteps, some drawbacks as you get back to a more normal world. But I would expect that over time, productivity has kind of always increased as we've increased technology and whatnot. It surprised me to essentially see productivity continue to drop from here on out.
Yeah, that is interesting. That's not a value that I pay too much attention to, but it seems like
I know you're like, dude, I just look at charts. I don't know what you're talking about.
Well, I mean, at the end of the day, you know, like most people would tell you, or most people who are really deeply into technical analysis, they would tell you only price pays, right? You hear this from the biggest traders in the world. At the end of the day, no matter what's going on in the news, no matter what this guy is saying or what that guy is doing, or, you know, what decisions have been made, price is price, and it is what it is. And, you know, sometimes it serves you to turn off the news. You know, there's a lot of voices out there, right? Like with a lot of opinions, and some of those opinions are very loud.
Well, and that's what I think is so interesting about charts and technical analysis. I mentioned this earlier, is like you get to these points of importance in the market, whether it's like a Fed decision or a CPI, and then it just like happens that the chart is also at this very pivotal point. It's like, all right, is this because of this or that because of that? You know, and it's like hard to know which came first, chicken or egg, but it's however it is, it always correlates, it seems, whether you're looking at, and I mentioned earlier, like someone was asking, oh, like when would you buy Bitcoin? I was like, I'd buy Bitcoin as soon as Powell gives us some hint that like he's starting to pivot. And I don't think it'll matter where Bitcoin is at on the chart. As soon as the Fed pivots, it's going to go up. But it'll probably end up happening that it's somewhere important on the chart, just the way things work out.
That would be my that's what I would suppose as well.
All right, which means we're probably wrong if we're both in the.
Oh no, I think it's just a matter of like where, you know, there. I guess there is a certain amount of, you know, you can find something on the chart to align with your, you know, the story that comes out, whatever it is. But you're right, that does tend to happen. Pivotal news events tend to occur kind of like right at pivotal places on the chart. I heard somebody once say that there should be a role. There should be like a technical analyst role at every major company, so that they could make the suggestion like, hey, if you're going to announce some big earnings news, you should do so kind of when stock prices around here, because you'll get the best bang for your buck or something like that. I don't know if that's something that actually exists in real life, but I've heard people joke about that before.
No, I think that, what about any individual? Oh, did we just get a nice home run? Albert, just go deep or something. What about any individual names? We've only got a couple minutes left, Jason. I apologize because I know our interview got cut a little bit short today, but we'll get you back on soon. Any individual names? When we see like Netflix showing a lot of strength today, up 7.5%. Target's up 5%. Apple, of course, still down on the news, but is well off its lows. What individual names have you been watching? Anything looking interesting either on the long or short side?
Man, I am so focused on futures. It's kind of hard for me to pay attention to individual names.
Okay.
That's just like where my head is at right now. I'm really trying to like get them down.
Yeah, man. Hone in on something and become an expert. That's what you got to do.
Yeah, we had a show last night on Twitter, the TrendSpider Trade Ideas of the Week space. Let me see what our guests suggested. I can't quite remember what all it was. Kira had AMD. She was like slowly scaling into AMD, which
on the long side.
Yeah, she has a huge level at 60. This is what she was talking about, Kira Turner from T3. This level is, you know, if you are into technical analysis, this is like a holy expletive kind of level, right? The price should go there. And every technical analysis, any person who's into technical analysis, even if you're relatively new to it, you see that and you go, oh, that's definitely an important level. And so she was talking last night about, well, the fact that it's like such a big, obvious level, maybe price never gets there. Maybe they front run it because so many people are expecting it to come into that 60, 58, 60 level. So she was kind of playing daily, you know, kind of buying dips, selling rips, and trying to kind of slowly build a position that way in the chance that it doesn't ever get there. I don't know if it'll get there. Technical analysis.
Can I
go ahead?
I was going to say, can I muddy your technical analysis with some dirty fundamentals?
Hit me.
The other thing, talking about AMD on the long side here, we talked a lot about NVIDIA. So NVIDIA actually, its latest graphics card, a lot of it's customers, gamers, are up in arms over it. They think it's too expensive. It's bulky. It's not as big of an upgrade. So there's a lot of people speculating that AMD is now going to be able to capture a lot of NVIDIA's market share if it's able to kind of put out. So again, I mean, it might be this is one of those cases where as this is happening, you're approaching an important level, and it's, you know, just one of these coincidence, probably not coincidence, but one of these things. So again, that is could be a potential bullish case right now for AMD, that they're able to grab some market share from its most major competitor.
Yeah, that's very, very interesting. I've not heard that news, but that is something to consider. Other ones that they had, our buddy Bracco, he suggested Oxy. He was going long Oxy, looking for this gap fill. Pretty much almost got it up into 62 there. It's been holding, you know, I think he was kind of watching this kind of thing, this trend line that's been just kind of, price has been playing pretty nice. You could see where my level was, where I'm looking to try and buy it way down here at 42 bucks. That would take maybe a bit of a catastrophe, take out all of those stops and things, but that's what he was looking at. Our buddy Chicago Sean was looking at XLY, but he was looking at this for a short opportunity. I can't quite recall how he was playing it. I think he was doing some sort of like protected options trade, selling something and then buying something closer to the money, selling something further out of the money. I can't quite recall what it was, but yeah, I actually get a lot of my individual ticker ideas, or I get turned on to individual ticker ideas from our weekly shows on Tuesdays, where we have traders come in who talk about, you know, what they're watching specifically. I'm just so focused on futures. I can't distract myself with anything else.
Yeah. All right, man. Well, we're a little bit past 1, so that is about all the time we have for today. But like I said, I know we got our session cut a little bit short today, so we'll get you back on again soon. Always a pleasure having you on, Jason. Again, use the code. Let me see. I know I got this. Check out trendspider.com. Enter the code BZ25 to get 25% off. You're not going to find a better place to chart your trades. So, Jason, again, thanks for coming on. Where can folks find more from you?
Yeah, at Kretzky Trades on Twitter is my handle. And anybody who's interested in trying out the TrendSpider platform, definitely use that code. And then feel free to follow me, hit me up. I am more than happy to answer any questions that anybody has about anything. You know, we've got a team on hand that answers questions all day, Monday through Sunday. If you need help building a scanner, you need help understanding how to use this particular indicator or whatever it is, you know, like, we are, I think, the only charting platform that like you can actually reach out to real people and get questions answered and learn how to use the tool. So please do feel free to hit me up or hit up our support team.
Hell yeah, man. All right, Jason. Well, thanks again for hopping on the show. I know it was a little short notice. Enjoy the rest of your Wednesday and stay green. Good luck with your trades, man.
Cheers, Aaron. Have a good one, man.
You too. All right, guys, that was Jason Kretzky from TrendSpider. Again, go check that out, trendspider.com. Use the code BZ25. That will be a wrap for us today, Hump Day, Wednesday. Please smash the like if you have not already. Shout out to all our guests today, Jason Raznick, Jason Kretzky, a very Jason-heavy show today. Coming up, Money Mitch. Money Mitch got an interview coming up at 1:45. He'll be talking to Josh Saylor, the partner and co-founder of Blue Zone Wealth Advisors. That's interesting. I've actually done some reading on blue zones, basically different regions of the world where people are particularly healthy and live on average like above 100. There's only about 7 blue zones in the world. So I'm going to assume there's some sort of health aspect here. I'm excited. I'm going to tune into that 1:45. Without further ado, let's go ahead and wrap up and send it over to Money Mitch.